Microsoft is betting big on AI, from its partnership with OpenAI to its Azure ecosystem here. And after the tech giant's latest announcement, Copilot, our next guest saying that investors should be taking notice. He's calling shares undervalued for its AI opportunities. We want to bring in Fred Havemeyer. He is Macquarie's head of AI and software research, joining us now. Fred, it's great to have you here. So you're saying, at least making the case, that you think Microsoft shares are undervalued right now, given the potential that we're seeing from Gen AI and Copilot. So what does that profit potential look like?
Right, and thank you very much for having me on again here. So what we think is that when we're taking a look at the overall generative AI opportunity for Microsoft, we see a number of different avenues through which the company can monetize generative AI. Quite clearly, its Copilot product portfolio is one of them. So when we assess this landscape, we take a look at both the revenue opportunity and the profit potential. And we estimate that by fiscal year 2026, that Microsoft could generate an incremental about 49 cents of EPS per share in our base case of monetization, which includes our base case of uptake of the Copilot product portfolio across Microsoft 365 and also across the GitHub Copilot product portfolio. And within that, we also see an opportunity in our bull case for this to rise towards $2.17 per share of EPS uplift by fiscal 2026. In the eventuality that the uptake exceeds our expectations and that the profitability of generative AI is actually running at the high end of our estimates. So I think ultimately what we find is that we found the opportunity to raise our target price to about $430 based on a DCF analysis. And we're extremely optimistic about the Microsoft's ability to drive profitable growth with its Copilot product portfolio.
What type of pricing power do you also bake into the expectations in the calls here?
We're using the base case here that it's priced at about $30 per user per month for the Microsoft 365 Copilot product portfolio. And looking across the entire GitHub suite of products, we're looking again at just on the individual side that users are paying the typical $10 per user per month. And on the business side, that we're seeing business adoption of GitHub Copilot trending with the base case again here of just about $19 per user per month, not assuming that we see uptake yet of the more premium price enterprise SKU, which the company's recently announced.
Yeah, what do you think the uptake rate then looks like for that when you take a look at some of those longer term fundamentals and longer term expectations? And how do you see this playing out with the rise that we've seen in competition?
I think that Microsoft has such a substantial distribution channel already and is also, with Azure, able to distribute its software in an enterprise capable and ready way. Specifically in this case, actually, meaning that it's able to address enterprise security requirements, data privacy requirements, and so forth, which has been keeping many enterprises on the sideline with some other third-party vendors of generative AI software and solutions, that we think that it is positioned the best in the marketplace to drive uptake of generative AI products and services. And so our uptake rates over time here trend in a direction where you're seeing material, but not necessarily massive uptake in our base case of each of these products and services, sticking in around the single digits for Microsoft 365 Copilot, but then trending up into the double digits uptake rate towards 25% for GitHub, where we think that more technical users may be able to pull in this already very well reviewed product into their organizations to solve problems that they're facing day to day.
So how does this also translate into business opportunities or even take away business opportunities for some of the competitor Copilots out there, or kind of prompt and response or prompt and generation tools? We've heard from Salesforce even how they plan to roll out a very similar product, it sounds like.
Yeah, I think big picture, when we look at the marketplace right now with generative AI products and services, we would expect almost every software vendor to develop their own AI strategy, with many likely going down this pathway of offering copilots. That is to say, services that are powered by generative AI that are part of the process of helping to make people more productive. And so we'd expect to see this technology emerging almost everywhere. Now, what we think will actually differentiate companies in this landscape is whether they treat generative AI as a full product and the only standalone product, where, say, some sort of a chatbot, or whether you're doing what Microsoft is doing and you're treating it as a feature that is helping their users of their core products and services. If we look at Microsoft 365, and we're talking the Office suite, and making users of those products more efficient, more effective, and altogether just better users. And we think that if you take the latter stance of using it as a feature to make your existing suite of software more effective and better for the users and improving the experience, we think that you actually have differentiation in the market. If you take the former route of relying on AI to be the entire product, we think there's just less differentiation there. So we'd expect copilots to abound, and companies that really treat their software as their guiding North Star, we think they're going to be the most successful in this market.
Does the base case assume that regulators will look at Microsoft's investment into OpenAI and determine that it is not some type of kind of shadow merger, if you will?
Yeah, in our base case here, as we've been publishing recently, we've noted, of course, that Microsoft is consistently under regulatory scrutiny in one level or another. But from our point of view, there is no control mechanism of Microsoft into OpenAI under its present structure, which is that OpenAI is governed by a 501c3 with an independent board where Microsoft has no voting power. So when we look at OpenAI and Microsoft's investment into it, we don't believe that there is regulatory risk here. And if you look more broadly across the landscape of generative AI, we see an abundant landscape of competition here, one that is, in our point of view, not actually impacted by any of Microsoft's investments into this space, but has been very rapidly advancing. I mean, even quite recently, we've seen more competition emerge from the likes of startups such as Mistral, certainly Anthropic and others. It's not a narrow competitive landscape, so we don't assume that there will be regulatory impacts in our base case.
All right, well, Microsoft, a company that has long had more money, more problems, and more solutions at the end of the day, too, that they come up with. Fred Havemeyer, who is the Macquarie Head of AI and Software Research. Great to have you here on the show with us. Appreciate it.
Thank you.
Thanks.